Welcome back to Charting Essentials with me, Shaun Murison, Senior Market Analyst at IG. And today we are introducing another technical analysis indicator, which is the moving average. So what is a moving average? Very simply, it's an average of price data, whether it's a share price, quantity price, FX price. If you look at a daily chart and I added a 3-period moving average, it would be a 3-day average, an average of the last 3 days worth of price data, generally the closing price. If I added a 3-period moving average to an hourly chart, it would be average of the last 3 hours worth of price data. So relevant to the time frame that you add it to, I generally like to use daily charts, especially because I do a lot of forecasting, trying to keep the commentary quite relevant. The longer period moving average you use, the longer the trend that you're assessing. All right, so if you had a 10-period moving average or 10-day moving average, you'd be looking at a 10-day trend. If you had a 200-day simple moving average, you'd be looking at a 200-day trend. Easily accessible, you can just add it to your charts. You don't have to manually calculate anything. It's all done for you on the IG platform or on the mobile app. You just add that indicator to your chart. So how do we use the indicator? Well, you've got to think of a moving average as a dynamic trend line. So now how we drew trend lines on our charts to show direction. Well, this is an automated way of doing the same thing. So simple way, a common way of using it is saying, well, is the trend up or down? And we look at the price relative to the moving average. So if the price is above the moving average, so the price is above average, that trend is considered up. If the price is below the moving average, or price is below average, that trend is down. Now, I like the concept of KISS. If you haven't heard that before, it's keep it simple, stupid. And I'm certainly not implying anybody's stupid, but I do think it's a clever idea to just simplify your strategy in trading. Moving average is a great way of simplifying things. If you're using a trend line, maybe you don't know where to draw that trend line. You add a moving average. Moving average is simply just going to help keep you on the right side of the market, or at least understand where the general direction of that market is. Then once you have that idea, you can use something else, maybe another indicator to help trigger or time your entry into that particular market. So it is simple. It's a simple concept, and I think it's one that is often just overlooked. So remember the KISS principle. So if the price is above the moving average and the trend is up, doesn't mean I just go buy that security, whether it's a currency pair or a share or commodity, whatever it is. I might use other types of indicators. We've talked about price in the past, price analysis, other ideas to help me join that trend, to time the market. But as a filter, which side of the market I might prefer to be, I like to look at that trend. So price above the moving average, trend is up, I'm looking for long positions. Price below the moving average, trend is down, and I'm looking for short positions. So my preference on moving averages, I like to use 3 moving averages on a chart, 20, 50, and 200. 20 being a short-term moving average, 50 being more medium-term moving average, gauge of medium-term trend, and 200 being a longer-term trend. 200 is the most important for me, and it is quite universal. A lot of people do seem to use that number. I say, well, catchphrase, I suppose, or a phrase, I'm not sure who coined it. So the bulls live above the 200-day simple moving average, and the bears live below. Saying markets are positive above it, markets are negative below it. Let's add these to a chart and let's take a quick look. So from that IG platform, very, very simply, you can add that indicator, the moving average, just by clicking on that indicator tab, click on moving average, and it'll populate onto the chart. Now, you can set those moving averages however you like, just by clicking on this little button here. To edit the indicator, I'm selecting 20, 50. I'm changing the third one to 200. I like them to be red, green, and blue. That's just a habit of mine. Quirk as you will. I don't know why. Just something I enjoy. So in a downtrend, my preference is to see that 20-period moving average below the 50, which is below the 200. What we call proper order of moving averages in a downtrend when you're using 3. 10-second recap. Moving average is a dynamic trend line, helps us gauge trend, so help filter which side of the market we should be on. Lots of different ways of using it. That's just one way. Preference for me is using 20, 50, and 200-day simple moving averages, which is a gauge of short, medium, and long-term trend. I like them 20 to be above the 50, above the 200, up. So give me bonus time, give me bonus time. I like the 20 to be above the 50, above the 200 for proper order and an uptrend. I like the 20 to be below the 50, which is below the 200, for proper order in a downtrend. I mean, what is it, 20 seconds? I hope it's been helpful. We're going to take this concept, we're going to build on it in future episodes, so please do keep watching. I'm Shaun Murison, Senior Market Analyst at IG.